the Japanese economy following a contraction in the fourth quarter, with only a slightly more favorable outlook for the euro area and the United Kingdom. The outlook for many emerging market economies remains weak, with continuing recessions in Brazil and Russia. The slowdown in China appears to be broad-based, with a declining PMI, moderating consumer demand, and lower imports and exports. The uncertain prospects for China remain a source of intense speculation and uncertainty for the rest of the global economy. There are few signs of global inflation pressures, with inflation below target in most advanced economies, particularly in Japan and in the euro area. These trends, combined with slowing growth, have prompted looser monetary policies in a number of advanced economies, and accommodative policies are likely to persist. Contrary to this trend, the US Fed is expected to continue on its normalization path, but at a gradual pace. By contrast, exchange rate-induced inflation pressures persist in a number of emerging economies, particularly in Latin America, where more sustained tightening can be expected. The rand exchange rate has recovered somewhat from the lows experienced in December and January, but nevertheless remains highly volatile and vulnerable to domestic and external developments. Since the previous meeting of the MPC, the rand traded in a wide range between around 16 rands 40 and 15 rands 7 cents against the US dollar, and has appreciated by 4.5% against the US dollar, by 0.9% against the euro, and by 2% on a trade-weighted basis. A number of factors contributed to the appreciation of the rand during this period. This included the reaction to further monetary policy easing in advanced economies and the moderation of the US normalization path. Policy stimulus measures in China, which overshadowed disappointing Chinese economic data, and the reaction to domestic monetary tightening. Offsetting factors include the weak domestic growth outcome and higher inflation outlook, the increased risk of a sovereign ratings downgrade, and domestic political developments which have had a significant impact on the rand in the past few days in particular. The exchange rate was also negatively impacted by the wider than expected current account deficit and its slow pace of adjustments to a depreciated exchange rate. The adjustment is expected to remain low, particularly in the context of declining global trade. While the current account deficit was adequately financed in the fourth quarter, the lack of portfolio capital flows remains a concern, despite expectations of some improvement of flows to emerging markets in 2016. According to JSE data, since the beginning of the year, non-residents have been net purchasers of bonds to the value of around 6 billion rand, but net sellers of South African equities to the value of around 20 billion rands. The domestic economic growth outlook has deteriorated further. Annual economic growth of 1.3% in 2015 was in line with the bank's expectations, but the forecasts for 2016 and 2017 have been revised down from 0.9% and 1.6% respectively to 0.8% and 1.4%. Growth of 1.8% is forecast for 2018. The potential output growth estimate remains unchanged at 1.5%, rising to 1.8% by 2018. The weak growth trend remains consistent with the bank's leading business cycle indicator, which declined further in December. Although the RMB-BER Business Confidence Index was unchanged in the first quarter, it remained at its 5-year low and masked a collapse in the manufacturing confidence index. The GDP slowdown was fairly broad-based, with contractions in the agriculture, manufacturing, and transport and communication sectors. The outlook for the first quarter for mining and manufacturing is constrained, following sharply negative growth rates in both sectors in January, particularly in mining. Although the Barclays PMI increased marginally in February, it remained below the neutral 50 level for the 7th consecutive month, and capacity utilization in the sector also remained relatively low. The continuing drought also points to an unfavorable outlook for the agricultural sector. While growth in expenditure on gross fixed capital formation improved in the final quarter of 2015, it remains low at an annual growth rate of 1.4%. Although capital expenditure by the private sector turned positive in the fourth quarter, it was concentrated in the renewable energy sector, whilst in most other sectors, real capital investment contracted. These growth and investment trends create an unfavorable climate for making inroads in the unemployment rate, which increased marginally to 24.5% in the fourth quarter of 2015 from 24.3% a year earlier. Growth in consumption expenditure by households increased in the final quarter of 2015, but at 1.6% was still at relatively low levels. While retail sales growth on a year-on-year basis was fairly resilient, the consecutive month-to-month contractions in real retail trade sales growth in December and January could signal further pressure on consumption expenditure, consistent with low levels of consumer confidence. Total new vehicle sales continues to decline, although more positively, there was strong vehicle export growth in February. A number of factors are expected to constrain consumption expenditure, despite the persistence of wage and salary increases in excess of inflation. These factors include rising inflation and higher interest rates, higher levels of household debt, and negative wealth effects from low or negative asset price growth. Furthermore, credit extension to households by the banking sector remains subdued, in contrast to the more vibrant growth in credit extension to the corporate sector, particularly with respect to mortgage advances on commercial properties and renewable energy investments. The recent budget tabled in Parliament provides for a fiscal consolidation path which sees the consolidated government budget deficit declining from an estimated 3.2% of GDP in 2016-17 to 2.4% in the 2018-2019 fiscal year. This is expected to be achieved through a combination of a lower expenditure ceiling and increased tax revenues. This path, if realized, can be expected to moderate inflation somewhat while improving South Africa's credit metrics and confidence in general. Food price pressures driven by the drought and the depreciated exchange rate have intensified by more than previously forecast and remain a significant upside to inflation. Manufactured food price inflation measured 7.8% in the PPI, whilst agricultural prices increased by 25.9%, with cereals and other crops increasing by 79.2%. These increases are expected to impact with a lag on consumer prices. Annual CPI food price inflation is now expected to peak at 11.6% in the final quarter of 2016, compared with 11.3% previously. International oil prices have recovered somewhat from their lows of below $30 per barrel seen in January, as the global oversupply appears to have subsided in the wake of production cutbacks in a number of countries. Although the bank has reduced its oil price assumption for the forecast period, it still assumes an upward trajectory as the previous forecast. However, there is some upside risk to this forecast should some agreement on an output freeze be reached by some of the larger producers. The domestic petrol price was reduced by about 69 cents per litre earlier this month to its lowest level since March 2015. However, the current under-recovery, driven mainly by higher international product prices, suggests that this decline could be substantially reversed in April. This increase will be in addition to the 30 cents per litre increase in the fuel levy announced in the budget. Although the inflation forecast has improved moderately since the previous meeting of the Monetary Policy Committee, the committee remains concerned about the protracted nature of the breach of the target. Furthermore, the committee assesses the risks to the forecast to be on the upside. The main risk factors relate to the exchange rate and food prices. The exchange rate of the rand continues to be highly volatile and vulnerable to changes in both domestic and external developments. Whilst the pass-through from the exchange rate to inflation is still relatively low, there are signs that this may be increasing. Food prices have been accelerating faster than previously expected due to the weaker exchange rate and the intensification of the drought, resulting in an upward revision to the food price forecasts. The committee views the risks to this forecast to be on the upside, particularly for 2017, when fairly strong favorable base effects are expected. A more protracted drought, combined with a weaker exchange rate and restocking of herds, may keep food prices inflation elevated for a longer period than currently forecast. The committee also assesses the risk to the international oil price assumption to be on the upside. The MPC is cognizant of the fact that demand pressures on inflation remain subdued, and indications are that household consumption expenditure is likely to remain constrained. Nevertheless, the recent increase in core inflation and its expected upward trend is indicative of broader inflation pressures and possible second-round effects from supply-side shocks. Whilst the evolution of inflation expectations is critical in this regard, at this stage there is no clear evidence of a deterioration in longer-term inflation expectations, but they remain at elevated levels. The committee remains concerned about the weak growth outlook amid negative business and consumer confidence. The growth challenges facing the economy are compounded by the deteriorating outlook for global growth. The committee assesses the risks to the growth outlook to be on the downside. Given the upside risk to the inflation forecast and the protracted period of the expected breach, the MPC decided that further tightening was required to complement the previous moves. Accordingly, the MPC decided to increase the repurchase rate by 25 basis points to 7% per annum effective from the 18th of March 2016. 3 members of the MPC favored a 25 basis point increase, whilst 3 members preferred no change. Ultimately, the committee decided on an increase of 25 basis points. The committee faced the continuing dilemma of a deteriorating inflation environment and a worsening growth outlook. The MPC remains sensitive to the positive negative effects of policy tightening on cyclical growth, but will remain focused on its mandate of maintaining price stability. Let's now turn to the questions, and as usual, please identify yourself and the media house that you represent, and we will take your questions. Right at the back, Ntsakisi, and you, sir. Okay, we'll start the three at the back row.
Thank you. Good afternoon, Governor Ntsakisi Mashangani from Business Day. What were the reasons behind the downward revision to GDP forecast? And Moody's is in the country. Have you met? Are you going to meet? If not, why? And what are some of the messages that you'd like to give to them? Thank you.
Sir?
Sorry, yeah, Ed Stoddard with Reuters. Governor, you mentioned that domestic political developments have had a significant impact on the rand in the past few days. I'm wondering how big a concern are those to the MPC, especially if they persist. Thank you.
There was another hand, right?
Yes, afternoon, Governor. I'm Kgelang Batha from Bloomberg News. Just following up on my question from my colleague. We've seen the rand being impacted by events of political uncertainty. Has the bank factored that into the rand's movements and the impact that could have on inflation?
Miriam?
Governor. Yeah, I was wondering, the split decision was quite interesting. It's the first time I remember it being split in the middle. How did you come to the decision to raise rates by 25 basis points when half of you favored no increase? And my other question is, again, referring to domestic political developments, how important is it to the stability of the rand, business confidence, and capital flows to resolve these domestic political developments quickly and decisively?
Is that stability of the rand, capital flows, and what? What about them?
How important is it to the stability of these things to resolve domestic political developments quickly and decisively?
Okay, thank you very much. Let's start with the political questions. A week is a long time in politics, so I can't judge what the political developments would do going forward. The MPC does not deliberate on political developments. We applied our minds to developments in the exchange rate, and we tried to understand what were driving the exchange rate. And to the extent that our analysis suggested was that the exchange rate was driven by domestic political developments. Of course, we can do with more favorable developments to the extent that they would be useful for the stabilization of the currency, because the volatility of the currency remains a concern for us. Ntsakisi, you asked the question about the reasons for the revision of the downward revision of the growth. It's a number of factors. More importantly has been the global economic environment. But our growth outlook is actually more in line with what we have seen elsewhere. Suffice to say that growth remains constrained. It remains constrained by low investment growth. It remains constrained by a low domestic consumptions, but also more importantly, an important driver here being net exports. And in the absence of a strong global demand, you are not going to get a boost from the developments on that front. Have we met Moody's? No, we haven't met Moody's. Will we meet them? Definitely, we will meet them. What are we going to discuss with them? We will know when we meet them. The impact of the rand, again, I mean, that leave the politics aside. We had consistently highlighted that the risks to the inflation outlook had been, in the main, driven by the exchange rate and all the pass-through that comes through into the domestic price formation. That remains a concern. If you looked at food prices, international food prices had actually declined in dollar terms. We had drought here, but you would then realize that in the main, what has been driving food prices domestically had actually been the effects of the exchange rate, because most of the food prices are linked to international food prices. There are aspects of food that are purely domestic, which are not affected by the rand, and that might tend to be driven in the main by the drought conditions rather than by what we had seen with respect to the rand. Miriam, stability of the rand, yes, we would like to have a stable rand. Capital flows, yes, we would like to have capital flows because we are running a current account deficit, and that current account deficit had tended to be financed by those capital flows. Investor confidence thus becomes very important, because you are not going to be getting those capital flows unless you have investor confidence. Movements in the foreign exchange markets are as much driven by fundamentals as they are driven by investor confidence. More importantly is that even domestic investment is actually driven by confidence. So the issue of confidence is actually a very important one. And the more you create a policy environment that reinforces positive sentiments towards the country, the better it is to improve the business confidence that you talked about. Let's move to the next. Gentlemen, is there anyone who wants to add anything? No? Let's start with the new hands. Tsepo?
Good afternoon, Governor Tsepo Mongwa, SABC News. You're expecting the core inflation to increase outside the target. And this is a sign that price pressures are becoming more generalized and the secondary effects are in the pipeline. Have you looked at the impact of this, especially the increases and general increases in inflation, the impact of this on poor households?
I'm Khelang from Bloomberg. My question is not just to you, Governor, but also to Deputy Governor Minele, who I think accompanied the Minister of Finance on the road shows in Europe as well as in the US. My question is, what did investors and lenders want to hear from the central bank in terms of confidence, as well as assuring them that the central bank will adhere to the price stability mandate?
Yes, sir.
Sorry, Ed Stoddard with Reuters again. Sorry, I just want to ask you another politically related question. Just because it is topical today, I was just wondering if I could ask, have you or any of your deputies ever been offered government jobs by non-government actors? Thank
Offered
you.
Government jobs?
Government jobs by non-government actors.
Miriam? I haven't forgotten your other question. I'll answer it. Ask the other questions.
Yeah, you mean you want me to ask another question now? Because I was very...
I will come to your question.
The split decision, yeah.
If you don't have, it's okay.
At the moment, I don't have any others.
Okay, say.
Afternoon, Governor. I'm Funeko from Reuters News. Just wanted to ask, you said your expectations for improved capital flows were upended. What were those factors that went into those expectations not being met? Thanks.
Is that your name again?
Mfuneko.
Mfuneko.
Thanks.
That question I'm going to give to Mr. Minere because he has been speaking to owners of capital for a whole week. Hillary?
Hilary Jaffe from Business Day. Governor, have you modeled the impact of a possible downgrade in South Africa's sovereign ratings on capital flows and the rand? I'm talking about a possible downgrade by at least one of the rating agencies to sub-investment grade status. To what extent have you taken it into account in your forecast of the exchange rate and of inflation?
Sakis?
Thanks. Nzakis again from the Business Day. The Fed yesterday sort of gave markets guidance in terms of what to expect on rate hikes, and I suppose that kind of gives some certainty. Any chance that could happen at the SAB? Thank you.
What could happen?
That markets could be also given an indication in terms of rates. Thank you.
You have now thought of a question.
Yeah.
Miriam.
Thank you. Sorry, I did have this question before, and I only just remembered it now. Hillary raised the issue of modeling and possible downgrades to junk status, what effect this would have on our assets. But the question I also wanted to ask was, Moody's has us on review for a possible downgrade. Given that they are a notch above the others, and there is so much speculation about this, would a Moody's downgrade really hurt us that much, or do you think the market has maybe priced that in?
Okay, Rashad, you are the modeler, my friend. You're going to have to deal with that modeling question. Mr. Minan, why don't you, in the meantime, deal with the roadshow and the capital flows? Yeah.
Thank you very much. I mean, the main focus of the roadshow was for the National Treasury and the Minister to provide an update on his budget that was recently tabled in Parliament. We were part of the delegation together with representatives from business to basically convey and provide confidence to investors around the overall situation in South Africa, and obviously we would cover the monetary policy side of it. I guess the questions that they were interested in as far as monetary policy is concerned would be no different from the kind of questions that were asked today. They wanted to get a sense of how we think about this policy dilemma that we've been in of needing to counter inflation pressures in an environment of weaker growth, how we think about the exchange rate volatility, issues of capital flows that has been asked, and which of the inflation risks we think have got what kind of weights and what we focused mostly on. And that would have been sort of the main focus of their question. They literally just wanted to think how we think about our role, and in particular, how we deal with this pressure of needing to make sure that we deliver to a mandate of price stability while at the same time being sensitive to the growth environment that we find ourselves in. If I may pick up on the other questions in terms of what occasions reduce capital flows and expectations, if I got the question right. I guess this is the issue around Monetary policy divergence that we have been reporting on for a while, the expectations in particular of interest rates normalization in the US that has occasioned a changing pattern of capital flows, obviously also influenced by the fact that growth dynamics had changed in recent times, with emerging market growth having become weaker and advanced economy growth having sort of taken over, if you wish, as the more prominent engine for growth recently. To what extent one can model those and think about how they could be affected by ratings downgrades is very difficult to say, because partly some of the movements would have been anticipated. Some people would have adjusted their portfolios depending on their views in anticipation of the downgrade. Some of the, as just like we talk about it in terms of the exchange rate, that we're not quite sure how much of it is priced in. And also one must understand that it is not a question of a movement en masse once there is a downgrade in expectation. Some of the investors are not too perturbed by what rating agencies say, because they conduct their own analysis and they make their own assessments in terms of what guides their investments. Whereas, of course, others have got mandates that have been given to them by their investors that bind them to certain minimum ratings that they must adhere to. So to what extent some of those adjustments as part of this changing capital flow patterns, particularly as we observed them last year, might have sort of been adjusted or taken in advance, and what may still come is very difficult to say. And similarly, there was a question about the Moody's downgrade. I think it is absolutely critical to highlight the fact that the ratings level that Moody's assigns to South Africa at the moment is one level above the other two rating agencies and two levels above sub-investment grade. But of course, it would depend entirely on what investors think. Should Moody's downgrade South Africa, it'll be, of course, a function of what people think the others might do, or how potentially they might follow through with the next step, and so that's what would inform them. But it's difficult to say what exact impact that will have. But it's certainly not something that would help sentiment, and there may be an element of movements that we will see should some downgrade happen. But it's difficult to say, you know, what exactly would happen and how much would happen. But I think it's important to note that if a downgrade were to be effected by Moody's, it would be bringing them into line with what the other two rating agencies are rating us. And with regard to these investor mandates that require investment grade ratings, quite a number of them do not necessarily require all three major rating agencies to be at investment grade. Two of them would suffice, so it's likely to play itself out over time as and when these ratings are adjusted. But as you know, all efforts are being focused on making sure that that ratings trajectory takes another profile as opposed to going towards the sub-investment grade.
Okay, that dealt with all the questions, including the one Rashad was supposed to answer. Ntsakisi, market guidance. I think you've got to understand why central banks in advanced economies try to do market guidance. They are struggling to create inflation. And they are trying to signal that they are putting every effort in creating inflation. That is the problem we are not facing. The problem we are facing is dealing with inflation outside of our target range. So we have not thought that it would be necessary for us to do any market guidance. A question from Reuters. If you've been given any government jobs off by non-governmental people, we will deal with that at the end. Sapo, core inflation and its impact on poor households. You can put core aside because you see, you said core, and you have taken food, petrol, and electricity out of that. Statistics show us that the poor spend the bulk of their income actually on food. A significant proportion of their income on food. So a rise in inflation actually has got far-reaching social consequences. It erodes the income of the poor. It erodes the income of those on a fixed income because prices are rising and prices rise all the time, and you could only get a salary increase or an increase in your social grant once a year. And so for as long as prices are rising, the purchasing power of your income is declining. Those in the middle to upper income, or those in the upper income brackets, they can find ways of protecting themselves against inflation. And as such, when one sees inflation rising, the first thought should be, what is the impact on the poor? For they can't protect themselves against inflation. It's a very important factor to comprehend in the discharge of our duties, either as monetary authorities or as fiscal authorities, that inflation hurts the poor more than any other category in our society. Let's then deal with the offered jobs. I guess you said any of our colleagues. You said from non-governmental persons. I mean, I presume that you also include that we have not had any job offers from the private sector. Because headhunters do call and say, would you be interested in this job? I'm working on this assignment for this company. Would you be interested in that job? I presume you include those. But the last two gentlemen on the right there, if they were offered any job elsewhere, they were going to come and talk to me and say that I am thinking of leaving the bank because there is this interesting offer on the table. They have never come to me with such a thing and saying that there are any interesting offers on the table. They are a very committed lot to the central bank. So I've got no doubt that you will see them for a long time to come in the central bank. The other three distinguished gentlemen here serve at the pleasure of the president. The president appoints them in terms of the South African Reserve Bank Act. That act provides that in making that appointment, the president must have consultations with the Minister of Finance and with the board of the South African Reserve Bank. Those are the only three authorities involved in the appointment of this gentleman here. And as it always happens, even when the term comes to an end, the president will call you in and say that I have received representations from the boards of the South African Reserve Bank that says that you are doing a very good job. Can you please continue for another term? Or he might even decide, even that they had said that, to apply his mind and decide that it is time to appoint somebody else. That also applies to me. I am appointed by the president, serve at his pleasure, and he appoints me after he had an engagement with the Minister of Finance and with the board of the South African Reserve Bank. That is the process that we have in the bank. The board of the South African Reserve Bank is a statutory board, is not outside of government. The Minister of Finance is a minister in government, and the President is the head of state. Those are the three parties involved in the appointment of governor and deputy governors. Miriam, your split decision, there is no split decision. Read the statement. We didn't say 3 voted. We said 3 favored. So after our people had favored certain positions, we had deliberations, and then we agreed that the correct position to go with is to go with a 25 basis point hike in the repo rate. Thank you very much. Any last questions? There's a question on webcast. We can't see them, so we've got to.
It's Hannah Zaidi from MoneyWeb. How does the Reserve Bank feel about the public dispute between the Finance Ministry and the Hawks? And is it at all concerned that its independence could be compromised following the recent revelations from MPC Jonas 9, 12, etc.?
Miriam?
Thank you. Just a follow-up question. Because growth is so poor at the moment, and because inflation is, your forecast is starting to come down a bit, can you still say we're still in a hiking cycle with any certainty, as you have done in the past?
Any other? Were those the last questions? Rashad, are we still on a hiking cycle?
Yeah, look, I think that the critical point is that I would make 2 points. The one point is that at several MPCs, we argued that the bar is set very high for monetary easing. And that partly has to do with the fact that you know, we've done what we can to a large extent. The monetary policy is still very accommodative as it stands. I think when we look at the hiking cycle, one cannot take for granted that every meeting would constitute an increase in the repo rate successively. It all depends on what current data says to us, what the extent to which the balance of risks change. So we are in a tightening cycle. I think the important question is the extent to which the speed of this cycle moves because of a number of data points that come on from time to time.
Let me just add and say that, as we had stated before, that even if we are on a tightening cycle, you will not see the kinds of tightening that you had seen in the previous hiking cycles, pre-inflation targeting, where there was no credible anchor of monetary policy like we are having now, and it was never clear what it is that the central bank was doing. But even in the era of inflation targeting, and remember that we are a flexible inflation targeter, and we try to see things through the cycle. And if you are trying to see things through the cycle, data becomes very important. And this data changes all the time. You know, at the previous meeting, we had the inflation outlook being higher than what it is now. We came through now, we fed through new data. We arrived at a different outlook. Unfortunately, it still shows that we are outside of the target. Data is at the heart of the things that we are doing. MoneyWeb, the independence of the South African Reserve Bank is enshrined in the Constitution of the Republic of South Africa, and we have never felt any sense that that independence is under threat. And if ever it was to be under threat, you can rest assured that the good men and women of the South African Reserve Bank will defend the independence of the Reserve Bank as enshrined in the Constitution. Minister of Finance and the Hawks, I think those questions will be best answered by the Minister of Finance and the Hawks. Any other questions? In the absence of any questions, thank you very much. We will see you back again in May.